45% of North Americans don't invest at all. Like not in their retirement, they don't have a self-directed brokerage account, they don't have a financial advisor. That's a lot of people. We can ask the question, why? And here I'm going to focus specifically on self-directed investing. We spent a good amount of time talking about financial advisors. So this came from a paper that was just released at the end of last year, and it talked about how non-investors perceive this very high entry and participation cost. So the entry cost is, oh gosh, I have to know all this stuff to even get into the market, and participation cost, well, I have to watch it all the time. I've got to pick the right stocks. I've got to be like on it like a day trader, but you know, my job, I'm a dentist or I'm a whatever, like I don't have time for that stuff. So there's some misconceptions about what you could do, or misconception about what's necessary to be a self-directed investor. Now, while it's true that you could generate alpha through there's specific services and newsletters and platforms that could provide you with that, but you don't have to do that. So there's this misconception among both non-investors and investors about how involved you need to be to have long-term positive returns. So this is the why bother that you saw earlier. And like, that's a big difference. Sitting in the S&P can be terrifying. I get it, especially what's going on now. But to develop the competence, the equanimity, the tools, the ability, or use the tools, which I'll show you in a second, it pays off. It has like a massive payoff. Human capital, getting educated and having that is one of the biggest areas of growth for people. But like having the skills to be a long-term investor is something that can differentiate you as well. So not just getting, a law degree or MBA or whatever it is, like that on top of other good financial decision-making puts you in a very, very good situation. And you don't need luck to do that. So that's that big gap I was talking about where you can do this. You can do that yourself, whether you are a younger person who's like still in school or maybe just recently out of school, or if you're older, even thinking about retirement. It's not game over. You can always start. There are ways to grow wealth over time, and the principles are the same.